Hi everybody, this is Lance from thetatraders.com. This video we're going to do the 2-2-1 strategy. I'm going to show you how I took this trade, how you actually enter it in on Thinkorswim, and how to look at the Analyze tab to see the pros and cons to it. There are some good pros to it, there are some good cons. I personally wouldn't want to do this with a large amount of my account, but I'm okay using a few of these as the market is relatively stable or possibly going to be a downturn, and you have a lot of extra buying power to do them. So I'm going to share my screen real quick. All right, so the trade that I placed this morning, this evening really, 2-2-1 trade. Essentially what that means is we're going to be buying two put debit spreads, and then we're going to be selling one naked put against it. Typically, the one naked put that you're going to sell will be at least the same premium as the net debit of the two put debit spreads. In this case, I actually took in a little bit more in the naked put. So MES was 5,100, about 30, I think. So we're going to look at actual trade here. So I ended up buying two put debit spreads. I bought the 49.25, sold the 48.75, and that was a net debit of 7.25 per debit. So if you have two of those, you do 7.25 times two. So we have a net debit of 14.5 from the debit spreads. What I did with it is I sold a naked put at 47.50. Notice that that's lower than the put debit spreads. And I took in a credit of 21.25. So I take the 21.25, subtract the 14.5 for the debit spreads, and I'm at 6.75 for a total credit. MES has a 5 multiplier, so you multiply that by 5, and you get an initial premium of $33.75. Nothing that's really special there. It's one of the cons of the strategy, is it's hard to get a good amount of initial premium on the trade. But as you'll see, you get quite a bit more when it drops to these put debit spread prices. Here's how you enter it in on Thinkorswim. The trade tab, type in /MES. Thinkorswim's being slow here. /MES. And then I sold the 59 days out. So 59 days out, we are going to buy the 49.25 and sell the 48.75. I did the MESU contract because I wanted to go to the next expiration cycle. Be a lot easier to deal with it than the current MESM. 49.25. Going to go down to the 49.25 strike. We're going to buy two of those. Thinkorswim's using up all my bandwidth. 49.25. I'm going to click the bid on that. Then I went to the 48.75. I'm going to hold control, click the ask. And that makes it a vertical where it's the other way around actually. You gotta click the ask on the 49.25, click the bid on the 48.75. That makes it a net debit. And my net debit was 7.25. Then with that, I'm going to sell one of the 47.50. Let me first make these two contracts. Then I'm going to sell one of the 47.50. Go to 47.50, hold control, click the bid. I'm only going to sell one of those. There's a net credit there. Right now it's 7.25. I got 6.75. I'm just going to show this on the Analyze tab. 6.75. Let's get rid of all the previous stuff on Analyze tab. Then on the Trade tab, right click, Analyze Trade. And you're going to see a pretty similar risk return graph as a 1-1-2 trade or a safeguard trade. You see over here, the green line is a little bit above the 0 line. This is where my net credit was of 33.75. What's neat is if it goes to 48.75 or less, then we're good on the two sold puts of the put debit spread, and then you're going to be at the max profit. Max profit here would be essentially 21.25 is your credit. We make 50 on the debits, and the max profit is the width of the spread, 50. Subtract the 7.25 for the debit. You make 42.75 per put debit spread, times that by two of them, and you get 88.5 as a net debit. I'm sorry, that'll be your max profit. You could add the 21.25 from the naked put, assuming it expires worthless. And you can make a total premium of 106.75. MES again as a 5 multiplier. Your max profit is really big, $533.75. And that's that top line here. If you look on the trade tab, it goes on a paper trade account. You only need $451.50 buying power to take it. I would keep another few hundred in cash, probably about $800 should be good for the total buying power plus cash needed due to span margin. So if you're making $533.75 off about $800 or so, total buying power plus cash, you're looking at a 66.7% return. And it says 59 days out, so about 2 months, 66% in 2 months, you get 33% a month on your money. Good overall return if you hit that trap profit on the top here. Break even point is lower than the 47.50 because these will be worth more as a credit. In this case, the break even is 46.43. This is quite a bit lower than the 47.50 strike price. So even if you go below that naked put, you could still profit off it. Unlike a lot of other trades where if you're below the naked puts, you're not going to have much wiggle room there. You're going to be at a loss pretty quickly. The way that I'd probably manage this trade is I'm going to look to close the naked puts at about a 90% profit. So I'm going to look to close the naked puts at 2. And then if the trade stays where it is, one of the negatives is you're only going to make about $33 on the trade off 800. 33 off 800 is not a very good return. Looking at maybe 4% in 2 months. Not a horrible return, but not a great return. But it has the potential to make a much bigger return if you get below that 48.75. What's also neat about the trade is, see that purple line, it's going to start moving pretty quickly as you get closer to the expiration. You'll see the purple line get close to the green line. This red line here is your break-even point. And you can see as you're in the trade longer and longer, the break-even point goes lower. So overall, one of the main pros is very big trap profit, lower break-even than the sold put. One of the cons is you're not going to make much money on the initial trade if the market stays where it is. So I'd recommend doing these as a kind of like satellite strategy over just doing these primarily. You want to look for trades that make in a good amount of premium when you start the trade in general, and that's just my thoughts. Obviously, your thoughts could be different than mine, but I think that's a good way to go in order to I think that's a good way to go in order to make a pretty good possible profit. These are slight hedges. They're not a full hedge because we do want the market to drop in this particular trade. And if it does drop, it could offset some of the other trades where you took a bigger initial premium. Again, this is Lance from PayTheTraders.com. If you find this trade interested, you can join on our membership. It's Inner Circle membership. You'll get one-on-one access to me on Zoom calls. Join over 300 like-minded individuals and very interested in selling options to make premium. Again, if you have any questions, leave a comment down below this video. Hopefully this was very helpful to you guys, and I'll see you guys on the next one.